Okay, chapter 1, Intro Managerial Accounting. Imagine you are the managers of the company. What do you need to do? You have to perform several activities in order to manage the company, in order to manage the work, in order to manage the people, in order to manage anything that you want to manage. First, you have to do planning. Second, you have to do directing and motivating. Third, you have to do control. And the last thing that left is to do decisions, to make decisions. Everything starts not with the planning, but by selecting the goal. First, you have to have a goal. Once you have a goal, then you can start planning by identifying the alternatives. Which alternative is going to bring me to my goal or my objective, what I want to achieve? Once you identify enough alternatives, you're going to select the one that brings you to the goal either faster, either more efficient, either the easiest way, either the cheapest way, the way your objective is to reach your goal. And you're going to prepare and develop a budget in order to guide you through the process. Once you select the alternative, how you're going to go and achieve your goal. So again, on the planning stage, you identify the alternative, selecting the alternative which is the best for you, and preparing budget. How exactly you're going to do step by step, walk through alternative that you selected, through the path to achieve your goal. Objective is you to reach your goal. That's on the planning stage. Now we're moving to the next stage, which is directing and motivating. Why do we need to direct and motivate? Because usually during the journey, by following the alternative that you're selecting, you're going to have ups and downs. You're going to forget about this. You're going to forget about that. So you have to remind yourself, hey, you have a goal. You have objective. You already select your alternatives. Stop swinging left and right. Follow your path. Follow your budget. Because that's the way you're going to reach your goal. The directing and motivating is going to be your daily activity, sometimes more than once a day. Why? Because we as humans, we have our ups and downs. Sometimes we are very motivated. Sometimes we are very down. So somebody has to give us that motivation. Who will be that? Well, that will be you. Why? Because you're the one who studied to be a manager. You'll be the one who have to engage the people and remind them, hey, in our organization, that's our goal. And I want you to follow the budget. I want you to follow the steps that we already selected in order to achieve what we have to do. So you have to make sure the employee working on the assignments every day. When there's a problems, you have to solve those problems every single day. You have to be able to resolve all the conflicts, all the problems, solve the problems, resolve the conflicts, encourage people, motivate them, give them additional boost so they can remind themselves, hey, I have to do this. Obviously, to be able to do all of this, you have to be very effective communicator. Your communications has to be on a very high level. The next stage on the management activities is the controlling stage, control stage. Everybody, I mean, I don't know everybody, but at least for me, when I hear control, I'm kind of scared. I don't know how you feel, but that's how I feel when I hear control. It's kind of scared. But you don't have to be, because control actually is something that works for your benefit. On the control stage here, what you're doing is you're comparing where you are in reality, compare where you want to be in your budget on your planning stage. Since you create your plan, you already know how your progress is going to go step by step. On the control stage, you're just checking, is the actual results anywhere closer to the budget? And if they're closer, that means you follow your path. If there's huge discrepancy, plus or minus, that means you deviate from your plan. So either you're getting closer to the goal, either you're getting further from the goal. Which goal? Your goal, the goal that you choose. So that's why the controlling function is actually very useful for you to understand. Do you actually following the path in order to achieve your goal or the company goal? And through all the stages, you have to do this activity, which is directing and motivating. Through directing and motivating, you have to do the decision making. You have to make decisions. The most basic managerial skill is ability to make intelligent, data-driven decisions. So in order to make that intelligent, data-driven decision, you have to have the knowledge. You have to have the skills. You have to have the plan. You have to be able to motivate and direct. You have to be able to do the control. You have to be able to analyze the information and to making the right decisions. But everything comes to few basic questions. Since we are in the environment of the company, we have to focus on a few things. First, what shall we sell? To whom should we selling to? And how exactly we gonna execute our plan in order to achieve our goal? Obviously, now we're living in a very interesting stage of humanity. Technology in some area is just flying away. And at the same time, in some areas, is far, far, far away. But we have to talk a little bit about the big data. And that's going to come later on in your study here in Douglas College. You're going to have this course, which is data analytics. And in data analytics, you're going to talk more about, for the accounting people. For the accounting people, you're going to have this course, data analytics. And in data analytics, you're going to talk more about, the teacher is going to talk more about information, big data, how we are going to approach this information, what we're going to do, how exactly we're going to do it. But now we're living in a world that companies making decisions by analyzing ginormous amount of data, which coming from everywhere. And as you can see, estimated that less than 5% or 0.5% of available data is currently being analyzed and used to support the decision making. Probably not, because everything changed from 2020. Those is from this particular part of the slide is from 2021. So now we can see that that probably 0.5% is being analyzed. That's not entirely correct. As you already know, we have available that magical thing called artificial intelligence, which do analysis and support our decisions. We're going to the point that we cannot make a decision, or we cannot make anything without consulting with artificial intelligence. Now, what's the big data? That refers to the large collection of information, which from where you're getting it, you're getting from everywhere, inside, outside, internal, external, from everywhere. Can we structure it? Yes, we can structure it. We can put it in the memo, we can put it in the report. Do we have unstructured data? Yes, we do have unstructured data. That can be any kind of data, which is not in the memo, not in the report, and everywhere else. But again, don't forget, we have a powerful tool in the hands of the artificial intelligence, which not only collects storing information, but also predicting the information. The big data is often related to the 5 V's. And the first 3 are variety, volume, velocity, which refine the definition of the big data. So the variety refers to the data information in which the information is stored. We're storing information in any kind of format. As you can see, now you're writing memos, you're writing emails, you're writing, you're typing, creating Excel spreadsheets, you're creating any kind of other sources of information, and you're storing it in different format. Sometimes having that information in different format is not very useful, isn't it? So somebody has to be able to convert the information from one format to another format. Volume, obviously, it refers to the quantity of the information. Before, not that long ago, we had problem with storing the information. Now that problem is not longer available. There are limited space for the information. I won't be surprised if somebody make like a server room or maybe they already have it, on the moon, and storing all the information directly on the moon. Why? Because it's safe, it's cold. You don't have to worry about overheating and everything like that. The next V is velocity. Speak for the rate in which data are received and used by the information or by organization. We have to understand some of the data have a limited life. So for some of the data, we have to do some special procedures in order to protect the information and to store it properly. Now we have 2 other V's, which is related to the value and veracity. Value implies for the time and the money of the organization needs to organize, store, convert, and analyze the data. You can easily see how much money now the people spending for the purpose of the information. for the storing information, for analyzing the information, for collecting the information, for converting information from one format to another format, in order to have the reports, in order to have the information, in order to use that information in a way that I would say they don't even know what kind of way to use it. Veracity refers to the fact that the users expect their data to be accurate and trustworthy. Now, how accurate is the information that you're receiving? That's another thing, but that's what you expect. And now we coming as a accounting manager, now the manager accounting professional comes. So by understanding this, he can help with the analysis and the options, and to help those stakeholders to make the right decisions. So as you can see, the purpose for accountant is going to shift a little bit from journal entry into the not analyzing the information, but mostly for providing, by having analysis information, to choosing the right decisions, which will be in the line of the stakeholders' needs and what exactly they need. Now we're coming after we understand what the big data is. Let's see what the data analytics is. Data analytics refers to the process of analyzing the data and we drawing the conclusion about the information. How are we going to communicate once we do that conclusion? How are we going to communicate it? We're going to use a different format now. The data analysis has to be presented in some kind of techniques which people can perceive it, understand it, and use it. One of the techniques is visualization. What kind of analysis we're going to have? We're going to have a descriptive analysis, which covers what's happened. We have a diagnostic analysis, why it happened. Predictive analysis, what's going to happen in the future. And we have the prescriptive analysis, which is related to, is there anything I can do about it? Again, you guys going to live in very interesting time. I'm not living in this time. I'm super excited too. But you have to go next level and next level and the next level. And as you can see, technology is changing super fast these days. Even though we're not talking about it, even though we don't understand it, but everything is growing super fast right now. In terms of developing artificial intelligence, developing the information, analyzing the information, using the information to persuade people to make choices and impose to the people ideas and choices which they not naturally is going to make. Let's go back to the planning and control cycle. Let's leave the big data and analysis to the data analytic courses. Let's focus it back to the managerial accounting, which are the activities that you as a manager have to do. Again, you have to do the planning. You have to formulate and literally narrow down the long-term and short-term plans. Why do we need that plan? Again, to achieve your goal. Then you have to implement the plan by directly motivating yourself, the people around you, your employees, everybody, in order you to achieve the goal that you want to achieve. Then you have to measure the performance and compare the actual with whatever you're planning, whatever you did in the planning stage. And that's what we call control. Can you control the path that the company going to, in order to achieve the goal. Obviously, the other thing that you need to achieve your goal, you need a strategy. Strategy, this is the best definition that I have seen so far. Strategy is a game plan that enables the company to attract customers by differentiating itself from everybody else. Let's talk a little bit about this. Now imagine, probably not long from now, you're going to end up in the situation when somebody has to choose you among another 100 candidates for the position that you're applying to. Now the question is, can you attract that customer? By distinguishing yourself from all the other 100 people which are applying for the same job. Do you have something which is super unique, so it's going to make you different than everybody else? So the customer, which is the employer, is going to choose you instead of anybody else. That's why the focal point in the strategy, not only company strategy, your strategy, is you to target the customer. But in order to target the customer, you have to understand who the customer is. And you have to understand what the customer wants. Once you understand the customer, what he needs, what he wants, then it's easy for you to understand how you can distinguish yourself from everybody else. For the strategy, you have different options. You're applying the customer value proposition here. So you focus on the customer, and you have different ways to focus on the customer. First strategy is you to apply customer intimacy strategy. Customer intimacy strategy means that you literally know everything about that particular customer. You understand and respond to his individual needs. So he gets exactly what he wanted, exactly when he wanted, the way he wanted, at the time he wanted. Second strategy is operational excellence. Now, the operational excellence involving you to be faster, you to be efficient, you to be convenient, and you to be cheaper. Because you're perfect. The last strategy is for me, that's my favorite strategy. That's the product leadership strategy. On the product leadership strategy, you're focusing on the only one thing. You're offering the highest possible quality of the product, which has no other equivalent on the market. And you have so many examples. I mean, not many examples, because the people who are actually providing that high quality products are not so many. And they're getting lesser and lesser. Sometimes I'm feeling that all the industry and every players on the industry, all the companies are more focusing now on achieving the operational excellence strategy rather than focusing on the product leadership. How would you know which one is focusing on what strategy? The simple way you can put it is the company who don't offer Christmas discount or Christmas sales or on watch the companies where on the Black Friday, on the Boxing Day, they don't offer any discounts. Those are your product leadership company. The company which literally applying the product leadership strategy. They don't need to offer any discount. You're not going to get that products cheap. Why? Because the quality is super high. You're not getting a Christmas sale on Chanel bag. I'm sorry. Chanel never offered sales. But everybody else offers Christmas sales. Why? Because they're focusing on different strategy. That's for the strategy. Now let's do some comparison between managerial accounting and financial accounting. All of you coming from 1110 and 1210, which is the financial accounting. You know what we're doing in the financial accounting. We're doing journal entries, we're preparing financial reports. We're using the historical information to prepare the current situation and current picture of the company. What about managerial accounting? How those two are different? Well, they're different based on different points that we have to compare them. First, let's see based on the users. Based on the user, financial accounting is focused only and only on the external users. They're the one who wants the financial statements. Who are those? Those are creditors and lenders and investors. Managerial accounting, on the other hand, the users are the managers who are working inside of the company. Based on the time, financial reportings are applying the historical perspective. I'm looking what happened. How was that recorded on the financial statements? How was that presented on financial statements? On the managerial accounting, I'm using what I'm using the just a second. Just give me a second here. See who turned on his mic. So we should shut it down. No, there's no mic on. Okay, let's continue with this. Sorry for the interruption. The time focus on the managerial accounting again is the future. That's why I like managerial accounting better than financial reporting. Yes, we're using the historical information, but we're only using it to decide, to predict the future in terms of what decisions we can make in order to change something that's happening in the company. Verifiability versus relevance is another point that we can compare both financial and managerial accounting. And as you can see, the financial accounting is more focused on the information to be objective and verified. Where in the managerial accounting, I'm more concerned with, is this information relevant for my current decision? Is it relevant for the product that I'm currently trying to analyze? Is it relevant for the customers that I'm trying to understand, is it profitable or not? Based on the precision versus timeliness, financial, as you already know, in financial accounting, we're focusing on the preciseness of the information. Not only precise, but it has to be checked. First, we have the accountant, then we have the controller, then we have the internal auditor, then we have external auditor, then we have the auditor of the auditor, in order the information to be super precise, super accurate. Because the small mistakes, it might change the opinion of our investors or lenders or creditors. Where in the managerial accounting, am I focused on precision? Not really. If I'm running my coffee shop and I'm asking for, give me the information of the coffee that I have left in my store and how much milk I have. If you make a mistake with one pack of coffee, I'm not that concerned, but I want the information right away. so I can make the next step and make the decision. So tomorrow I can still supply or provide my customers with the service that they want. Subject is the next thing. Primary focus on the company is the report, company report as itself on the financial reporting. When the managerial accounting, I don't care about the financial reports on the company. I don't want to know on the financial report of the company, where on the financial report on the Starbucks, which is posted for the New York Stock Exchange, you can see the profitability of latte or pumpkin spice latte. Is it profitable? How was the margin? What's the break-even point? Can I find that on that report? No. So what I'm focused? I'm focused on the segment reporting in managerial accounting. Something related to that particular client, for that particular product, for that part of time. What's happening here with this person? So I can make a decision. For the rules, in financial reporting, as you know, we have to follow so many rules. We have to follow general accepting accounting principles. We have to follow the accounting standards for the private enterprises. We have to follow international financial reporting standards. We have to follow all the standards available everywhere. In the managerial accounting, we don't have to follow anything. Lasting requirements. For the financial reporting, the reports are mandatory. Why? Because everybody who has external users has to prepare financial reports at the end of the year. And you always have external user. Even if you don't have lenders, even if the investors, which is acting as an owner of the company and work as a inside of the company, as a principal of the company, you still have the external users. The external user is kind of the revenue. They also want your financial reports. In the managerial accounting, there's no mandatory. There's no requirements for the reports. So that brings a very interesting point here. You have to understand that this intro managerial accounting course in the next one, for those of you who continue with the accounting, intermediate managerial accounting and advanced managerial accounting, everything that you're going to learn, you can throw it in the garbage. Why? Because managerial accounting is not mandatory. You don't have to do it. The question is, do you want to do it? Is it going to help you to be profitable what you're doing? Do you have to make a decisions? That's the catch. So let's continue with the slides and see what else waiting for us. The company organization. When we're talking about company organization, please think big. Don't think of a local grocery store where the father is the owner of the company and the CFO and the one who's doing all the purchases. The mother is CEO, and she's doing all the deposits, and the daughter working on the counter, and she's the cashier and she's doing the accounting. Here we're talking of big organizations which have a shareholders, which shareholders electing board of directors, which board of directors elect the president electing all the officers inside the company, including the chief financial officer, and the chief financial officer choosing the treasurer, controller, and so forth and so forth. So as you can see, we're talking here about the decentralization and decentralizing the organization in order people to delegate the function to the other people, which is going to give them more freedom to do other things. We're going to come to this a little bit later, I believe in chapter 10. We're going to talk about the company structure and company organization a little bit more deeper. So based on how decentralized company is, and based on the people who working in the company, we have two type of positions in the company. We have the line position and we have a staff position. Line position is the one who stay in the line. Let's put it this way, just stay in the line. Where the staff position is the one that assisting the line position. When you see the line position, when you're talking about the line position employees in the company, think about Neil Armstrong. Neil Armstrong is the person who stepped on the moon. Everybody knows him. Staff position, think of the people who create the rocket. Do you know their names? Do you know the name of the person who tied the bolt on the bottom of the rocket, which if he hasn't been tied it properly, it's gonna make the rocket to explode? You'll never find that name because he's just a staff position. But on the line position, you're always gonna remember their names. The question is who you want to be. Controller is one of the line position in the company, which probably you're gonna end up being. So the member of the top management responsible, this is the obviously member of the top management who is responsible of the providing relevant reports for the decision making for the internal and external users. So as you can see, the controller has to have ability to provide financial reporting and managerial accounting reports. Why do we need to do this? To understand the value chain of the company. And the value chain of the company is the process inside the company, which follows series of steps, which converting nothing into something. Simple example will be, imagine we have what we have. Where can we start? We want to go to school. Let's pretend we're just human beings who wants to go to school. In order to go to school, you have to do what you have to do, but you need to take a notes. But the problem is we don't have a notebook. We don't have anything to write on. So what do we have to do? Somehow magically we have to convert the trees through the process into the sheet of paper, and those sheet of papers we have to put it together in the kind of notebook on which we can take a note. So first we have to start with the research and development, what we have to use, how we can use it, how we can convert something which has nothing to do with the simple sheet of paper. We have to convert it into the paper. Then we have to come up with product design, what kind of shape, what kind of size, what kind of format, what kind of organization that notebook is going to have. And then we're going to start manufacturing. Once we finish with the manufacturing, now we have a product which the student want and the student definitely need when they're going to study in order to take a notes. But they don't have it in their hands. We already have it, but they don't know about it. So what we have to do? We have to do marketing. We have to tell everybody, hey, we have this game-changing device or tool which you can take a notes. Once we tell them about this, we have magically transferred that notebook from our warehouse where we're manufacturing it into the hands of the students. And the last thing that we have to do, we have to provide a customer service, because no matter how much we marketing our notebook, there always will be somebody, hey, for what should I use this one? So you have to be patient on the telephone to say, first you have to flip the first page, which is the cover page. And inside you're gonna see these white sheets, which are lined. And then you can use it between the lines, you can put the letters And once you combine letters one after another, you can create words. When you put few words together, you create a sentence. And once you create one sentence, you can put a full stop and start with the next sentence. And once you create 5 sentences, you're going to have your paragraph. And that's how you can express your thoughts or take a note from somebody who expressed his thoughts. So that's your value chain of the company in the business. Converting nothing into a product which changing people's life. For that reason, in order our business process to function efficiently, we have different approaches. First approach is to have a lean production. Second approach is to use the enterprise system. And the third approach is to have a risk management. The first one, the lean production, is related to our ability to understand the customer needs and to produce enough amount of products which gonna satisfy the customer needs. There are two ways to do that. First, either you're not gonna know the customers very well, either you're gonna wait until the customer makes an order. Once the customer makes an order, you're producing only the amount of the products that the customer requested. And suddenly you convert yourself in just-in-time production. Which with just-in-time production, you're using the cash efficiently. You don't have overstock. You're not losing the from products because they're sitting on the shelf too much or because they're taking too much space on the warehouse, so you don't have to pay for the extra storage and anything like that. You're just efficiently using your capacity to produce the enough products which are related to exactly the customer needs. Why? Because the customer make an order. The other thing is you to link your system to another system which tells you what the customer wants and how much they want. And then you're producing that. That's how you're going to achieve that efficiency. Then you're going to work with a few defects, less waste effort, and quick response to the customer needs and customer time. Second approach will be enterprise system. In the enterprise system, obviously, in single software, you're going to put all the information. Now, you have so many examples of this. But let's go with this a single software, which putting all the information together, and then you're extracting these reports. And you have that access to the unique data, which give you ability to make interesting decisions. You know, sometimes when they're talking about this and seeing the reality, on one hand, we companies getting too high on technology. Put in mind Google, Microsoft, Facebook, all those social media, TikTok. And on the other hand, you have these small companies which don't even have enterprise systems. And that creates that huge gap between one reality and the other reality. With one foot, you're in the super distant future, and with the other foot, you're in the super distant past. You know, I had a guy who asked me, "Hey, can I have on my phone to see accounts receivable for a single client for my company with all the project related to that client, how much money he owes me, on which invoices, when was the last time he paid me, what's the current outstanding balance, what is the maximum balance that he ever reached, and how many days he pays. Can I see that on my cell phone? And I said, yes, you can. But in order to do that, you have to have a system for which you have to pay between $1,800,000. Plus, in order to support all this system, you have to have every year you have to pay for future enhancements and updates another $20,000 to $25,000. So now we're coming to the question: do you want to go with your family on vacation and spend $25,000, or you want to see accounts receivable of a single client on your cell phone, which is more valuable for you? You see, that's the tricky part, and we're going to talk about more later about this. The decision that you have to make between cost and benefits. Yes, it's easy. $25,000 for Google, that's nothing. That literally is, I don't know, from their scale, what will be that? That will be a small piece, some like a pencil in the whole expenses of the big organization. But for the small company, for the owner of the company that generates, let's say, $4 million, less than $4 million revenue per year, $25,000, that's a significant amount. So that's why on one hand, company spending billions of dollars to manipulate you and your choices, what you're selecting, what you're choosing, where you're going, how you're going. And on the other hand, you have those people which have to make that decision. It's a very interesting environment, I'm telling you. Risk management. Risk management now comes to the risk management. You company, in the company, you as a manager, actively to look for the risk, identify the risk, and manage the risk. Once you identify the risk, you have two options here. Either you're going to do nothing, either you're going to proactively find the management tactic to reduce the risk. How you can do that? By implementing specific type of controls. What kind of type of controls? That's example of the risk, business risk, and example of controls. I'm not going to read it for you. I believe you can handle this task. What I'm going to spend is on the something very interesting. What kind of quality the professional has to possess in order to call himself a professional. Not only the accountants, but every person who pretend to be professional has to maintain certain values. First one is the competence. Level of competence, which is appropriate for the profession that professional belongs to. You don't want to go to the surgery table and find out that the doctor is going to just do the surgery on you, graduated with B minus. And he didn't take any professional development course for the last 10 years. Second thing that every professional has to have is confidentiality. Why? Because we all, as a professional, have access to the confidential information, which we collect, which we use, which we analyze, but we have a professional responsibility to protect that information and keep it confidential. The fact that you're doing and seeing so many things, and you know more about the company as an accountant. If you might end up to be accountant in the small company. Trust me, you're gonna know about the business more than the owner. The owner of the company will not know as much as you know, but you have to keep it confidential. What you're doing, how you're doing it, what you know, what you don't know, you keep it for yourself. Integrity is the third one. You to identify the conflict and avoid the conflict of interest. It's very important you to keep your integrity. Because once you break that integrity, there's no going back, people. Once you cross that conflict of interest, that's going to be reminded for you over and over and over and over again, and people is going to start taking advantage of it. And you're never going to be independent anymore. And the last thing is objectivity. As a professional, you have to present in communication to the people which all responsibility, all available information, favorable and unfavorable, positive and negative, everything. And you have to leave the choice in their hands. You can recommend for course of action, but what they're going to choose, it has to be their choice. So why ethic? Let's do some communication here. I want to hear your opinion now. What do you know about the ethics? Can you guys hear me? Hello? Are you guys still there?
Yeah,
Yes, yes.
yeah.
What?
So like morality and not doing harm to others, that's ethics
Okay.
in
Who
some fields, like medicine,
who
for example.
who decide what's ethical and not ethical?
There's well, there's logos, ethos, and pathos, if you remember those from English class, and like the people who are in like a higher position than you, like you know the people who, for example, hand out the CPA designation to accountants who've been through school and so on, like in universities, they have ethical standards.
That sounds more like a rules. Ethic is something else. Make sense?
Understanding between what is right and wrong.
Understanding what is right and wrong, but who tells you what's right and wrong? Who's gonna tell us what is right and wrong? How would I know what is right and wrong? But yes, definitely depends on beliefs. But which beliefs? No, if it's law, then it's strictly then it's a law. Law has nothing to do with the ethic. Make sense? Correct way to behave, yes. Standards are set by the people. Okay, which people? Who's setting the standards? Society. Yes, perfect. That's great. Society establish the rules and establish what's right and wrong. I agree with that. Which society? What I'm looking is the society that you're living in. That's what I'm looking for. So if we have to go back is ethic, obviously those are standards, which are in business or normal people's behavior, which tells you what's right and wrong based on the society which you're living in. Make sense? So, as you know, most of us changing the societies, moving from one society to another society. So naturally, we already have some standards, what's right and what's wrong. But we change the society. Now the question is, do we have to change our ethical standards once we change the society? Do we have to learn new standards? Are we doing that? Are we still living under the standards from the society that we came from? And then becoming a very interesting point. We move away from where we were because we didn't like something, because we thought that whatever other people doing, that's wrong. We want to move somewhere so we can do the right thing. But we're moving to the new place and we start creating exactly the same society that we run away from. Not understanding the rules in the new society, not applying the rules in the new society, not understanding what's right and wrong in the new society, but still applying the rules from our old society. And we're trying to purposely manipulate this world that we live in, the new world that we live in, to look like the old society. So what we creating? On the new place, we're creating the old world. So if you escape from the first place to the new place, so you can have a different rules. But on the new place, you're applying exactly the same rules. Once you get sick of the old rules on the new place, where you gonna go? That's why I want you to understand it's very important we to understand where we are and which society we are and what's the rules, what's the ethical standards in the business, in economy, in that society that we are currently in. That's how you're gonna succeed in that society. You have to be flexible, you have to understand, you have to adjust yourself in order to achieve your goals. Simple example I'm gonna give you is every time when I go to my country of origin, as soon as I step on the airport, people there start telling me, oh, you're so nice. Oh, you're so friendly. Oh, you're smiling so much. Oh, you look so happy. And they start taking advantage of you. Because in that society, be nice means you're stupid. So naturally, people think you're stupid and start taking advantage of you. Well, it takes me probably one day to get back to the normal for that society in order to survive in that society. And once I come back here, I'm changing my standards again. So I can be convertible in this society here and succeed in this society here. Make sense? Is it important we to follow the ethical standards? Yes, it is. Why? Because without ethical standards in business economy, we all gonna suffer. How? We're gonna get lower quality of life with less desirable products and services at higher price. Question for you. Isn't it what exactly happening right now in the world? Isn't it what exactly we're getting? We're getting lower quality of life with less desirable goods and services at super high price. Did you ever ask yourself why? Why I'm buying TV which lasts me exactly 2 years, which magically happened to be the warranty period of that TV. And after that, it breaks. And when I try to repair it, the service guy tells me, why don't you buy a new one? Why? Because we don't have technology now to produce a TV which is going to last you for 50 years? Or because we purposely want to create a lower quality so we can charge a higher price? I'm going to leave it to you. Ethical is very interesting point, and it's very interesting thing. So I want you to think about it and think about yourself and what kind of ethical standards you have to apply as an individual and as a professional. Let's go to the corporate governance. Corporate governance involves the board of directors, top managers, and shareholders. And that's a system which companies direct and control. You understand that the board of directors controlling the top managers, which top managers are controlled by the shareholders. Why? Because they have to pursue the objectives of the shareholders, and the shareholders only want one thing and one thing only: more dividends. So the shareholders electing the board of directors to make sure that the top managers give them the more dividends. When we put a little bit more on that corporate governance picture, we're going to see that we have different players. We have the employee, we have the customers, we have the creditors, we have the suppliers. In the new reality now, we can add even more. You can add the other companies. We can add human rights. You can put the corporate social responsibility. We can put sustainability, environmental sustainability. When somebody talk about sustainability, environmental sustainability, what that means to you? Give me an example. How do you feel when somebody starts talking about the environmental sustainability? What that means to you? How do you translate this, and how do you perceive that thing, environmental sustainability or sustainability? Any ideas? Those are examples for this environmental sustainability. I want to see, do you understand the big picture of this environmental sustainability? Carbon neutral, yeah, that's one way you to achieve that sustainability. But what is sustainability? Okay, I like this. Caring about the environment and saving the nature. For what? For whom?
For future generations.
for future generation. Which are the future generations?
Our children and our grandchildren.
Our children. Focus on our children now, because this is our future generation. Are you happy right now? Can you close your eyes and say, I'm doing the best right now so my children can have a better future? And living in the same environment that I was living when I was a kid. Can you say that? Are you happy with everything that we're doing today and what we're gonna leave to our kids? Because they will be the one who have to live in the environment, sustainable environment that we're creating right now for them. Are you happy with what we're doing? As a society, as a human beings? What do you think? Somebody says no. How about the other? How about the other? One person out of 33 is not happy. How about the other 33 people? Is there anything we can do about it? Now the other question is, do we want to do something about it? Everything takes time. If you go back, it takes us 100 years, 100 years to pretty much to destroy planet Earth on, let's say, 30-40%. Now it's going to take us 300 years to restore it the way it was 100 years ago from now. You should read the very interesting report about the nature and see how many species we, humanity, making disappear every year, which never ever gonna be seen ever again. So for some of us, maybe we'll be happy to see to our kids one day, you know what? That species that you see on that picture, when I was a kid, I was actually able to see it in the nature. That's how we should translate a social responsibility and environmental sustainability. We to create a place for our kids so they can live the way we lived, at least. So that comes to the leadership perspective. In order we to achieve all those things, in order to make the people to do something, you have to, somebody has to become a leader. Why not you? Leaders have that behavior of the employee, and at the same time, as managers who can pursue the strategic goal and making the optimal decisions. So which are the factors that influence the behavior? Now, let's see. In order you to have proper behavior, you're going to rely on the motivation that comes inside of you. You're going to rely on something that incentives that's coming from outside. And the last thing that left is the bias. Unfortunately, we all have a bias. Every time when you hear teacher, you have something in your mind, right? Every time when you hear midterm, you already have something in your mind. That's a bias, which influence your behavior. Now, the good leaders, if you want to be leaders, you have to have that inside motivation. You have to have a way to highlight the important goals and motivate the people around you. And the last thing is to possess the cognitive bias. And it's very important for the leaders to recognize this. The other things that you need is you need two attributes for the leaders, which are credibility and respectful. You have to be credible and respectful. How can you be credible? By having technical competence. You have to know more about than the other people, and you have to use that knowledge. You have to have that personal integrity. And the last thing is here is you have to have a strong communication skills. You know, the other day I was thinking about this, strong communication skills. You know what comes to my mind? There's a movie, King's Speech, which with Colin Firth and Jeffrey Rush, and he is the king of England who is a stammer, and there was this episode of the movie when he was looking something on the projector, and suddenly Hitler became on the projector, and he was looking, and they said, "Let's move on." And he said, "No, no, no, let's watch it." And his daughter, watching Hitler, she asked him, "Papa, what he's saying?" And he said, "I don't know, but the way he's saying it sounds very convincing." That's a strong communication skills, people. That's true leader. Person, regardless whatever he did. If person, through communication, is able to convince the whole nation to follow him, he's a good example for strong communication skills. The other thing that you have to have as a leader is to be respectful. How can you be respectful? Why people should respect you? Why? Because you have to have a strong mentoring skills. You have to understand people and help them and guide them. You have to have a strong listening skills. What that means? Means that you have to, at some point, you have to stand in front of the mirror and ask yourself, why do I have 2 ears and 1 mouth? Maybe there should be a reason for that. And the last thing, you have to have a personal humility. Means that you have to be Mother Teresa. Literally. And now we're coming to the point. How many of the new leaders today, on the leaders who are ruling the world, have those two, credibility and respectful? How many? I'll leave that answer to you. And that concludes the first chapter for today. Let's make some break now, and let's continue with the chapter 2 in a few minutes.